CNBC's David Faber reporting today that ExxonMobil is nearing a deal to buy shale giant Pioneer Natural Resources. It would be Exxon's biggest acquisition since its merger with Mobil in 1999. Shares of Pioneer soaring on the back of this news, finishing the day up 10.5%, while Exxon trading lower, finishing down about 1.5%. But will a deal actually get done? Joining us now is Roth MKM Managing Director Leo Mariani. He covers Pioneer, and Wells Fargo Securities Senior Analyst Roger Reed, who covers both Pioneer and ExxonMobil. Good afternoon to you both. Roger, I'll start with you. I mean, just looking at the way both of these stocks traded today, it would seem like investors are betting that we actually get a deal struck and maybe even get a deal done here. Your thoughts?
Yeah, I mean, we put a note out to take a look at that, what a transaction would look at. And, you have to make some assumptions and all, but essentially kind of a neutral transaction to Exxon on a 2025 basis. And this transaction has been rumored for, in one way or another, for you could almost say 2 years, but aggressively most of 2023. So does it happen? We'll see. But is the potential there for it to happen? I'd say yes, fairly high.
Okay, Leo, what would Exxon get by buying Pioneer? Why is it such an enviable company, given the fact that it has all of these assets in Texas?
Yeah, look, so Pioneer is definitely one of the largest players there in the Permian Basin, pure play Midland Basin company. Arguably, it has the longest inventory in the space, as well as the highest quality inventory. Very strong balance sheet as well. It's always been seen as kind of the premium E&P company in the space. So certainly Exxon is kind of getting a gem out there at the end of the day. Exxon obviously has significant operations in the Permian already, in the Midland. So this will be very complementary to what they already own as well.
Okay. Roger, two thoughts on the Exxon piece of this puzzle. The first is, with a regulatory environment that we know has not been particularly amenable to big companies doing big deals, can this actually get done from that standpoint? And second, hasn't Exxon been talking about the fact that it's transitioning beyond hydrocarbons for the long term? What does this do to that?
Yeah. I mean, it's two separate items, but I think they go together fairly well. One is, look, I'm not going to second guess regulators for a deal even gets there. But if you look at the size of the two companies in the Permian, the size of the Permian relative to total U.S. production, we don't look at a market presence issue here. We think you'll be fine from a FTC HSR review standpoint. In terms of energy transition, energy security, does this fit? I would say it does. Number one, shale production tends to be better in terms of its GHG footprint than a lot of people think, and a lot of times better than a lot of alternatives overseas. Secondly, if you go back to just a couple of weeks ago, Exxon had a spotlight on their downstream business. And one of the things they highlighted is some of the long-term changes you'll see in their refining businesses, potentially in the chemical side, and ways that we'll end up using oil and gas that, could be very different 20, 30 years down the road. But you're going to need the oil and the gas, and you're going to need the chemicals and the refining downstream to make that happen. So to us, plus carbon capture, it all fits really well with Exxon.
Okay. Leo, key question for you now. If we see this deal get struck, what does this mean for the possibility of more M&A in the sector? And what do you think is a takeover target?
Yeah, so look, we've certainly seen a handful of deals already this summer amongst some of the public E&Ps getting taken out, as well as a couple of them merging. There's been a number of private companies in the Permian that have also been sold to some of the publics as well. So look, M&A has been sort of heating up. I generally think you're going to continue to see some more deals. It's always kind of hard to predict timing, but I think the bottom line is we're kind of in a sweet spot with respect to oil prices, where they're not the 100 plus they were in 22, but now we're kind of sitting just over 80 on WTI. Next year's prices are closer to kind of mid to high 70s. I think that's a reasonable mid-cycle level where more deals can get struck over time. And I think you've got more sellers also coming out of the woodwork right now, because the view is that the global economy could turn south over the next year, and it's probably a decent time for us to put our companies up for sale. And I think buyers want a lot of these premium assets, in particular in the Permian. So I think some of the other Permian publics, Matador Resources, ticker MTDR, Permian Resources, ticker PR, Diamondback Energy, ticker FANG, are all potential consolidation candidates in the Permian.